so last year Indian markets have done better compared to the global markets. So do we expect the same in 23?
Now, if you look at, as I always say, there are three things which drive equity market in the medium to long term. One is fundamental, both macro and corporate. The other is flow of fund towards the equity market, both domestic and foreign. And third thing is valuation. So if you look at in the context of 2022, India's macro was stronger than almost any other peer, large country, particularly the peers from G20. If you look at corporate performance, the corporate earnings growth was pretty robust, particularly during the first half of 2022. Even despite slowdown, we ended the year close to 15% trailing 12-month earnings growth, which is pretty robust. So if you look at in terms of fundamentals, both macro and corporate, India was doing decisively better than most of the countries. So far as the liquidity flow is concerned, during the first half of the year, India was seeing significant amount of outflow on account of foreign institutional investors. But here one has to understand this was not a flow out of India. This was a flow out of equity as an asset class globally. So it's not that FIs are selling only in India. They are selling across the world. They are selling in US, they are selling in France, they are selling in China. So almost all countries were seeing outflow of money from the equity market, and India was a part of it. But while there was almost 30 billion outflow during the first half of 2022, in the second half there was almost 12 billion inflow. So the FI flows also turned positive during the second half of the year. And third and the related point is that domestic flows have been extremely strong. So even when there was FI outflow, domestic flows are counterbalancing the FI outflow. If you look at just in terms of the SIP amount, the monthly SIP amount was somewhere close to 3,500 crore in 2016. This amount has now crossed 13,000 crore a month. The net SIP flows towards a mutual fund. So consequently, if you look at the ownership of the mutual fund in the equity market, in the free float market cap, has jumped from 9% in 2016 to about 18% in 2022. So it has just doubled. So that is in terms of liquidity also, particularly in the second half of the year, was extremely supportive. Domestic liquidity was continuously supportive. And third, if you look at valuations, on an average trailing 12-month price to earnings ratio of Nifty 50 during 2022 was between 21 and 22. If you look at the average between 2015 to 2021, it's almost 26.5. So if you look at good macro, good corporate fundamental, strong domestic flows towards the equity market, reversal of outflow of foreign flows in the second half of the year, and reasonable valuation, the combination of that made India one of the best performing equity market among the major countries during 2022. What is the perspective for 2023? Obviously, growth in India will also slow down as in other parts of the world. But having said that, as I just argued earlier, India will still be outperformer, particularly in GDP terms. Even in the context of corporate earnings, we think India will do, while the slowdown will continue, but still will get a significantly positive corporate earnings growth. So far as the domestic flows are concerned, as I told you, that major part of the flows coming to the equity market from domestic sources are coming through SIPs, and these SIPs are despite the market fluctuation between 2016 to 2022, we have seen these flows have only increased almost every month. So we don't think there is a big risk that SIP amount will go down substantially. So far as the foreign flows are concerned, as I told, it already turned positive during the second half of 2022. And typically, if you look at going back into the history of India, whenever in a year there has been an outflow of FI money out of India, say for example it happened in 2008, it happened in 2011, it happened in 2018. But whenever there has been an outflow, In the next couple of years, India on an average receives 20 billion or more of FI inflows. So from a FI, so from that perspective also, India is likely to get significant amount of FI flows. So far as the valuations is concerned, yes, because of the rally since November, and we hitting another new high after the previous peak was made in October 2021. The valuations have gone up a bit. Corporate earnings are slowing down, so therefore the valuation can get slightly richer. So it's not that India is extremely cheap at this level, but at the same time it's not that India is extremely expensive either. So it's still, the PE multiple on a trailing basis is still significantly lower than the last 5-year average. It's in line with the 10-year average, and it's only slightly above the last 20-year average. So from that perspective also we have comfort. So our sense is that like 2022, even in 2023, India's equity return will be positive. But having said that, this return is likely, as in 2022 it was below the long-term trend. Even in 23, we expect the return to be below the long-term trend of 11 to 13%. So we are positive on Indian equity, but we think investors should scale down their return expectation from the equity market from this year's perspective. But for longer-term investors in equity, they should not get so much bothered. This is because equity is basically a compounding story. It's not a speculative. So only the people who remain invested in the market, they create wealth by systematically the power of compounding. So our sense is that for the long-term investor should not be too much bothered. India's outlook still in the medium, even in the next 12 months, remains positive.